Welcome to this week's weekly technical analysis recap of the TSX Focus 5 stocks here at Train to Invest, silver, gold, oil, and several corresponding ETFs. Remember, this week we had Canada Day, so the movement overall wasn't as intense or volatile as it has been in previous weeks. When we look at the 3-year weekly chart for the Toronto Stock Exchange, and you can see how small the price bar is for the TSX. Unfortunately, we couldn't break through the 12.2, 12.250 mark, and we closed lower than we opened. So not a positive sign. Looking at the MACD and the MACD histogram, MACD trending lower, but the histogram is showing that the divergence on the negative side isn't growing. So that's a good sign. We saw a little bit of an increase here as it bounced off the 12,000 and moved higher, which is a good sign, showing that our level of support is still intact. Momentum is showing a mixed signal. Remember, MACD and the MACD histogram on the longer term, much more influential than the momentum indicators. However, RSI is flat, most likely due to the short week, but we did have a positive crossover in stochastic. Now, due to the short week, you can see that it didn't continue its steep uptrend, rather it sort of plateaued. Let's take a look at the 6-month daily chart. We can see that for the 4 days, 1, 2, 3, 4, not a whole lot of movement, opened just around 12.2, but definitely closed lower. We do have a positive MACD crossover for the week. It's a strong buy signal, and you can see that the histogram bars are diverging on the positive side, which is what we want to see. Momentum, however, fairly flat, and I figure that's due to the short week. We could see higher buying next week, pushing the index higher. If it breaks through this 12.2 mark, it will easily find its way up to 12.4, so we could be in for a strong week. Again, volatile as usual, and you can see we've, since the middle of April, went up all the way up to 12.8, came back down to 11.8, could be going up again. But there is that volatility. We need to be careful, but there's opportunities to make your 1% in the market. You just need to be careful when you get in. Here is the price of oil for the last 6 months. As you can see, it jumped almost $15 or almost 17%. So that's a great sign for energy companies. And this is, you can see the increase here has been quite steep due to the unrest in the Middle East. And that will impact our Focus 5 companies as well. 3-year weekly chart for Enbridge. You can see not great. Close pretty much where it opened for the week. MACD and the MACD histogram, very, very negative. But we seem to have bottomed out here on the histogram bars. The divergence and convergence section beginning to turn. And that's a good sign for the stock. Hopefully, over the next few weeks, we see this trend reverse and we again move back higher. Momentum, well, we do have a stochastic crossover, which is good. RSI is staying fairly flat. The 6-month daily chart pretty much shows the same sort of picture, flat, nothing great moving. We see the RSI and stochastic both in the red circles. Even though momentum pulled away for the week, as you can see, started higher here on Tuesday, ended down here on Friday. Even though momentum did pull away, the range is still fairly tight between 44 and 45. And it's not in a downward trend at all. It's just meandering lower. We do have a positive crossover on the MACD and the histogram. Good signs. Even though the bars are shrinking on the histogram, it's a good sign to see the crossover. And it's also a very good sign that it's holding at 44 here, showing that this level of support is going to show some strength for a while. So again, tight trading range, 44 to 45. But again, we could see some stronger movement next week. And we will see these turn around. Imperial Oil, 3-year weekly chart, green, 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 due to the rising oil prices. Good sign. We can see that on the weekly side of things in the price chart, definitely closed higher than it opened. Again, another positive sign. We could see a beginning of an uptrend as it heads towards 42.50. And if it breaks through 42.50, the next level of resistance is the $45 mark. So there's some room for it to grow. Strong, strong, beginning to be strong. Now remember, in longer term views, MACD and histogram are more influential and a better indicator where the stock is heading. So we may see this begin to turn higher and go on a bit of a run. On the 6-month daily chart, however, we see that it broke through 41 and was able to maintain above 41 for the entire week. Opened here on Friday, closed here on Friday. So we have a higher close and open, good way to end the week. Momentum, we have the stochastic crossing over here ever so slightly, indicating that momentum is with the stock. RSI is again hitting higher at the 60 level mark, so there is room for it to continue to grow and move higher. Could it break through 42? That is a distinct possibility, but it's had a hard time doing that since the middle of April, or I guess in April. It was last time it was at 42. But if it's able to break through 42, it's going to definitely go on a bit of a run, 43, even possibly 44. But this is a good sign. Again, we will see more buying next week. Hopefully it's not taking profits for IMO, but I expect it to move a bit higher and to test the 42 resistance mark next week. Suncor. Now Suncor hasn't seen the same amount of growth as IMO, partially due to its Middle Eastern assets. When it combined with Petro-Canada, it now has assets in Libya and Syria, etc. The unrest in the Middle East should be pushing it higher, but since its assets are directly located in the Middle East, there is some negative downward pressure. And you can see that on the weekly chart. Pretty much closed where it opened. MACD and MACD histogram are flat, barely any growth or movement there, even though the MACD is positive. Momentum is with the stock. It's slightly turned higher on both indicators, but as we examine the 6-month daily chart, you can see that it's been fairly flat for the last couple of days. Momentum is there, but there's no sense of urgency to move higher. We do have a MACD crossover here. Well, we'll be generous and call it a crossover. We do see the histogram bars rising, but it looks like the range has been between 30 and 31 for the last couple of days, and it's gone way past its lows of 28. It looks like 30 is going to hold for a while. We could see it break higher throughout the rest of next week. Significant resistance at 32, but if it's able to break through 32 over the next coming weeks, 33 is a very distinct possibility, but anything higher than 33 would require a massive, massive positive influx. So Suncor is still kind of treading water here. 30 to 32 is the range, so that's what I would look for the stock. Royal Bank, we have 3-year weekly chart here, not really good. Kind of stay away from it for now. Closed lower than opened here in the weekly chart. Hasn't really gone anywhere. Kind of stayed the same over the last 3 to 4 weeks. MACD continues to head lower. Nothing positive on the weekly chart. 6-month daily, bit of a different story. It's trading between 60 and 62. Seems to be the range right now. And you can see Friday closed lower than it opened. We do have a positive momentum here in the stochastic, and the RSI is showing some flat, but there is room for it to grow. 61 to 62, definite possibility throughout the week. Another positive crossover here in the MACD, showing some strong push there. But again, wait and see how it opens Monday. If it, again, opens on a good note, it could continue throughout the rest of the week because the momentum would continue. We would see the stochastic go higher, same with the RSI. But if it opens lower, momentum is going to quickly flee the stock, and we could see it hit down back to 60, which would be a good buying opportunity, or even lower. TD Bank, a bit of an up run over the last couple of weeks. It tried to break through this 85 mark, but closed lower for the week, under 84. So close to support, a little bit of an oversell. Momentum definitely fleeing, but we do have the MACD histogram and the MACD being in this blue flat section, which could indicate some growth coming up next week. Even though momentum has pulled back here, you can see on the 6-month daily charts, pulled back and pulled away. On Friday, it closed higher than it opened. We do have a positive MACD and a MACD histogram. So we could see that this is a bit of an oversell because it did drop almost all the way down to resistance or support and bounce back. Again, same thing with Royal Bank. If we see some positive selling on Monday, it could turn for the week and again head towards 85. So that's something that you should be watching out for. How does it open for the week, and follow it throughout. Here is gold, 6-month daily chart. Has lost over 25% in the last 6 months, down 433, almost 434 points or dollars per ounce. So not good. We did see a rise here, peaked, and then prices fell. And you're going to see that throughout the entire ETF that follows this commodity. Here we have CGL, the iShares Gold Bullion Fund, and as our gold prices rose, so too did the ETF price. But at the end of the day, on Friday when it fell, same thing happened with the ETF. MACD histogram and the MACD both saying stay away. Even though the divergence is shrinking, it's still negative. And then when we look at the momentum, it says stay away even further. As long as gold prices continue to fall, so too will this ETF. If you're looking to get in as a pledge against inflation, you may want to wait a little bit longer as gold prices still have room to fall. But if we go back, you can see that the lowest it went in the last 6 months is 1,200. So that may be where you want to jump in as well. Looking at the Gold Bull Plus ETF, HGU, potential MACD crossover here, but again, just looking at the price bars itself, as gold continues to decline, so too will the ETF price. RSI, stochastic saying stay away until gold prices turn higher consistently. Then and only then will we be able to jump in and see some capital appreciation on the ETF. Now, as gold prices continue to fall, the Gold Bear Plus ETF, HGD, will be able to benefit. And as you can see, great signs here. Still a positive MACD, and it will probably turn higher as gold continues to fall. Good support here at 2750, room to grow to 30 and beyond. Something we can look forward to as gold prices fall. And until the trend reverses itself, this may be the ETF to look for in the gold market. This is the price of silver over the last 6 months. 37%, almost 38% decline, so a much more rapid decline than gold. And same thing tried to rebound, plateaued, fell through. SVR, the iShares Silver Bullion Fund, again, that's SVR. Not as bearish as gold, but again, still, until silver prices turn around and start to rebound, this is ETF to stay away from trying to trade your 1%. Again, momentum not with us at all. If you're looking to get in potentially as a hedge against inflation, good buy here at $11. You can definitely save it, and it should move higher as silver starts to turn around. You can expect that commodity prices, especially in the precious metals with gold and silver, will not stay depressed for long. Countries are continuing to print money. The ECB, United States, Japan, China, all are printing money, and so eventually inflation is going to become rampant, and there will be a flood back towards gold and silver. So again, use a bit of a long-term approach when you're looking at these ETFs. Silver Bull Plus ETF, HZU. Again, not much movement with silver prices continuing to decline. Boom, momentum is moving away, especially with the last couple of days when the prices dropped dramatically. MACD and histogram are flat, but I wouldn't put too much stock on it turning around. Looking just at the price bars, again, lowest point in 6 months. So there's a lot of room for it to stay low and depressed for a long period of time. Here is the Silver Bear Plus ETF, HZD. Just like the gold ETF, our Gold Bear Plus ETF, as the prices continue to come down, the ETF continues to benefit. It was below $10 here for a while, and then gapped up as silver declined. So we can see momentum definitely there, MACD and histogram showing growth. Again, with the prices continuing to fall, the Bear Plus ETFs may be the way to go for now. That is it for us this week. Here's my email, questions, concerns, comments. I would love to hear from you. So email away. Check us out at www.traintoinvest.com for more information about what we do and the services we provide. And so that's it for us this week. Have a great rest of the weekend and beyond, and we'll see you guys next week. Bye now.
The organizer has ended the session.